The presentation provides a quick overview of one particular tool, DEMARK Sequential, that has proven useful in terms of a potentially more effective decision-making process in both mutual funds and stocks. Looking at Fidelity Canadian Growth Companies, a mutual fund, you've got your 9, you've got your 13 in July 2012, just prior to a 74% increase. And looking at TD US Blue Chip Equity Fund in October 2011, you've got your 9 and your 13 just prior to a 24% increase. Then in July 2012, 913 and a further 34% increase. Without getting into the exact formula or calculation, the DEMARK sequential indicator is always 913, 913. You can have any number of 9s, such as here 999, and here 99999, and here 999, 9999, but DEMARK sequential is always 913, 913. An example here with an individual stock, CNR, September 2011, and CIBC, July 2012. As an example of the flip side, protecting profits, Tech Resources, January 2008, 913, then a major inflection point, a 913 sell confirmation, followed by a 92% slide. So this goes to safety. So two strong priorities being protection of capital gains and protection of capital. Then a 913 buy and resumption of a move up. So as at the date of this presentation, before the next bear market inevitably begins, we'll stroll down memory lane and question a few myths. I often hear people tell me my portfolio is very balanced. Well, one of the most consistently top-rated Canadian balanced income funds, June 2008, DEMARK Sequential 913 sell, followed immediately by a precipitous 30% decline. And it takes a lot of stoicism to watch a balanced income fund that you own decline so much in value so quickly, as often even experienced investors panic and sell out at or near the bottom. Then 913 buy in February 2009. Another thing I've heard is the mutual fund manager will protect me, right? Well, this fund selects stocks with a high dividend yield, subjected to a rigorous screening process for the reliability and sustainability of the dividends. Well, after a 913 sell signal, this still did not protect it from a 45% decline in June 2008, and during the same period, the TSX Composite Index, the benchmark, was down 49%. So theoretically, the fund manager did a quote-unquote good job, beating the benchmark by 4 percentage points. But what difference did that really make to you? And the sell and buy indicators provided by DEMARK Sequential got you out of harm's way and back in again advantageously. As with any other indicator, DEMARK Sequential is not infallible. This is why any DEMARK Sequential buy or sell signal must be confirmed in daily, weekly, and monthly timeframes before being acted upon, utilizing specialized software specifically designed for that purpose. And there is a lot of faith in the idea that stock markets always come back, ultimately moving ever higher. Well, one glaring exception to this rule over the past quarter century has been the Tokyo Nikkei 225 index, which peaked out at around 39,000 in 1989, and over the ensuing 25 plus years has not even come close to reclaiming that level. And at the same time, there have been lots of tradable rallies, opportunities, and the nature of the markets has changed. For example, right here at home, the TSX Composite Index since 1997 has had just some incredible abrupt moves, up and down, seemingly coming out of nowhere. There will be many opportunities to make money, and there will be just as many imperatives to protect your profits, often at unexpected times. This is a dynamic process requiring ongoing evaluation, decision-making, and action to help you guarantee a worry-free financial future.